new business, Warren? You want to?
Okay, the first item is the presentation of the annual comprehensive financial report from our external auditors, Crossland.
Good afternoon.
Good afternoon.
So in front of you, you should have our results on the audit, and that's what I'm going to go through today. If you have questions on the ACFR, this is the time to ask. Welcome between the four of us and Janine. We can answer probably most of your questions. But this is focused around the actual audit procedures, not the accounting, the debits and credits, but we're happy to answer any questions on that as well. So starting, I feel like I should stand up. Starting on page 3, right after the agenda, this is our engagement team. It's a comprehensive audit. It's a large audit, so we have multiple pieces to it. David Hunt is here. He's handled the general hospital this year and the MNPS, water and sewer. We've got Jennifer here and Katie here. Katie Ferris is the overall manager on both the ACFR audit and the single audit, which is, to remind you, is the audit of the federal grants. And Jennifer is the first partner on the single audit. Page 4 goes over our responsibilities and management's responsibilities. Our responsibilities to express an opinion about whether the financial statements prepared by management under the oversight of this committee is fairly presented under U.S. Generally Accepted Accounting Principles. We performed our audit in accordance with professional standards, including governmental auditing standards and the uniform guidance, which is a single audit. We have the responsibility to maintain independence in fact and appearance, and an attitude of professional skepticism. And then finally, we're required to report to this committee any findings, significant deficiencies, material weaknesses, any deficiencies in internal control or non-compliance. Now, management, it's their responsibility to fairly present the financial statements in accordance with GAAP, to adopt proper accounting policies, all the things that we audit, establishing and maintaining effective internal controls, preventing and detecting fraud, disclosing to this committee and to us if they detect any fraud or have any kind of significant deficiencies. Turning to page 5, under AICPA's Code of Professional Conduct Rule 101, we are independent, in fact, in appearance. We go through great lengths to make sure that's the case. Page 6 is fraud risk. A long time ago, SAS 99 came out and said auditors, even though we used to say this isn't a forensic audit, it's just a financial statement audit. We don't have to do anything concerning fraud. Well, years ago, SAS 99 came out and said, time out, that's not exactly correct. We need you to at least gather information, have brainstorming meetings amongst your team, have inquiries of management, not just the CFO or the director of finance or the controller. Go outside of the finance office and have inquiries with the different divisions. Pull a school teacher in MNPS. Go to people who have nothing to do with the audit and ask around. Investigate any unusual or unexpected relationships, obviously for independence sake. But then we gather all this information and we respond to identified risk. That's how we design. The standards want us to design the nature and timing and extent of our procedures based on that fraud risk that we identified. And then we test for management override. Obviously, if it's fraud, there could be collusion, so management's looking for ways to circumvent the system, so we look for things like that. And then finally, evaluate our audit evidence. What did we find in our high-risk fraud areas? Did we find anything fraud? If we do find anything, what do we do about it? Well, we communicate to this committee if we did find anything, which we did. Page Page 7, these are our deliverables. So today we have the annual comprehensive financial report, and then under other deliverables, we have our required communication, which I'll eventually get to at the back of this booklet. So that's what we're presenting today. Quickly following that, we will issue which we project to be an unmodified opinion on the general hospital and on MNPS internal school funds. Finally, later after all that, hopefully by the end of December, we'll also issue our single audit, our audit on major programs, federal, state awards. And then after all those reports, then we will present our management letter that will be encompassing of all our issuances on any kind of just recommendations based on internal controls, or if we do have any significant deficiencies or material weaknesses, that's at that point we'll report those formally. And finally, at the very end, we'll file our data collection form, and that is a list and reporting of all the federal programs on a federal database. Page 8. Really, our audit methodology and approach is on the next 2 pages. This is a flow chart. So, we're going to update and document our understanding of Metro systems and its related risk. So that's when you get into audit. So there's really 4 main phases of an audit. In the audit planning, we're trying to figure out where the high risk areas are, and those change year to year. So if audits aren't just cookie cutter every year, the same thing over and over again, because things change, transactions change, things happen in the Metro government that are different from one year to the next, and that causes for significant risk to change and what areas that might be. So once we assess risk during the planning, then we decide, well, how are we going to audit? So you can rely on controls, or you could substantively audit. And in this government audit, we're doing both. Get to the next page, and then finally completion and reporting, and that's what we're doing today. But on page 9, some of the areas that we review the control around things rather than substantive testing: cash receipts and revenue, property tax billing. These are huge numbers, but in some cases, millions of transactions. And so you want to test the actual system and the controls around that system rather than try to rather than just pull invoice, rather than pull, Brack's property tax bill and look at it and make sure you pull the file, make sure you're testing the control around that. Some things make more sense to substantive test. And on the right side, we've listed some of the areas like treasury or investments. If we can confirm $300 million or whatever of investments with one bank, then that's pretty quick, that's pretty efficient, and third-party verification is your strongest audit evidence. Same thing goes with cash. But capital assets, if we can pull some invoices and look at that. Same with debt. If we put issuance of debt, if there's a bond issuance, a lot of times it's easier to substantively test. We also are going to look at the controls around that. We're just not going to fully rely on the control around those areas. Page 10 is your single audit. So right now, Nashville, Davidson County is a low-risk auditee, so we have to cover 20% of your total federal expenditures. We have to cover, as in test, 20%. If you're high risk, which you were up until about 3 years ago for 10 years, we had to cover 40%. So that's a big difference in testing. Now, the number of programs that we test, which is mandated by the uniform guidance on how to select those programs, can range year to year. Last year, 3, 4, 5 major programs got us our 20% coverage. This year, it's going to take 10 to 12 major programs. So it's over twice as much testing this year as last year for the same percentage. So the federal awards are just more spread out rather than huge lump sums like last year. So right here, we've listed the major programs that we're currently testing right now. It could move a little bit, but we feel good about what we're testing. Page 11, these are generally the significant activities or grants compliance, obviously, I mean, that the single audit is a huge component of this audit. Any new debt issuance, water and sewer had a new debt issuance and a refunding this year. And then, any kind of capital projects, if you build a soccer stadium or a football stadium, or, water and sewer, I think, had 200 and something million of capital improvements this year. So there's always, on the water and sewer side, large capital improvements. Page 12 is the accounting pronouncements adopted this year. We won't get into all these in detail. Probably the biggest one, which wasn't I wouldn't say a gigantic from a number standpoint, but from figuring out how to book it, was the leases this year. I think in note 9 is all your lease information. The rest of these I won't go through, but more clarification type issuances. Page 13, this is the additional required communications I mentioned before. Accounting estimates, all sets of financial statements have estimates, and we look at those estimates to make sure that they're effective and in compliance with GAAP. We believe they were. In your ACFR, there is unaudited information. It's not always in there, but in yours there is. There's a lot of it, primarily in your statistical section in the back. And we just make, even though they're unaudited, we still make sure they're consistent with the front of the financial statements, and they are. No transaction, which there's lack of authoritative guidance. No significant transactions been recognized in the proper, all significant transactions have been recognized in the proper period. No alternative accounting policies or practices. No difficulties encountered in dealing with management and concluding the audit. It was an absolute pleasure to work with management. They know what they're doing. They're on top of it, and it was a fantastic year.
Are you just saying that, or because they're all around you?
No.
Okay.
No. I hope they know how we feel about them. No disagreements with management regarding financial accounting, reporting, auditing. Management will provide appropriate representation. They'll sign a representation letter saying they provided everything we needed to properly do our audit. And we're not aware of any communications by management with other independent accountants. You can do that, call other firms for second opinion type stuff. We just want to be part of the conversation. So those are some of the other required. I know those were like fast, random comments, but those are the required communication points, and none of them really have a lot of relevance this year to the audit. Page 14, unrecorded audit differences. This is another area we're required to report on, and there were none, so that's what we're reporting. Page 15 are upcoming accounting developments. A lot of clarifications, a lot of efforts by the GASB to make financial statements more comparable amongst themselves, amongst different governments. Nothing major in here that's coming down the pipe, but we will be on top of these in the future. Answer any questions, and Janine and crew are real good about communicating with us throughout the year, so we don't have a whole bunch of stuff to decide during the audit. So we'll continue to do that. 16 is just our contacts, and that's it.
Questions? And the questions can be from the presentation or from the ACFR itself, or the financial report.
Thank you so much, Chair, for giving me the opportunity, and thank you for the presentation. I'm just confused, I guess, because we have a certificate of achievement of excellent financial reporting, and we've done this and gotten this for so many years, but the state comptroller came to the council and threatened to remove the council because of the financial situation. So I don't understand how that occurred. If we did everything well and proper and we got awards for that, why would it require the state comptroller to come and reprimand the council for its financial activity? Or
Well, I mean, I'm happy to answer. It was a little before, it was before my time, if you will. So the award itself from GFOA is on the ACFR. So they review the ACFR to make sure that we are in full compliance with all of the reporting guidelines that are required by GFOA and the state. And we are, and that's why we have received the award from GFOA and the certificate. The reason I think the state comptroller came in, and it's been several years ago, and some.
Yeah, it was during COVID 2020.
So they came in, I believe it was all around TANs reporting, which are tax anticipation notes. Metro had not properly sought approval for the tax anticipation notes that were done at Metro. So we are in full compliance now. We actually send that legislation through council. Council reviews it, council approves it, then it is actually sent to the state, and the state reviews that and approves it and actually sends us a letter saying, yes, you're in, full compliance. And we do all that. It's generally in the May-June timeframe. So all that was done properly for, 21, 22, and actually for fiscal 23 already as well.
So I think this, GFOA is issuing, like Janine said, from a reporting standpoint. Do you comply with best practices, basically, of reporting? They're not going to necessarily get involved in operational issues or the actual results, the actual numbers, just how those numbers are presented. And so I think that is a difference where the state, I think, was really getting, it's more of an operational.
Yeah, that's a great way to say it, John.
Can I just add, I don't want to diminish the value of that because that is very valuable. GFOA also gives awards for a budget, and it doesn't mean they support the initiatives or like the use of fund balance or revenues. It just means we followed the GFOA recommended budget process. And the components for the process are in there. It's not an indication of merit or worthiness of what you're actually funding. It is just you followed the rules that we created.
Right.
It's a big deal. But
right. I mean, I understand that, and I see that, and I guess that's what I was thinking, that it was really about an assessment of the process, pretty much like the assessment of your process when you oversee things, and particularly like Metro General, because I'm still concerned, and we may have discussed this before, because if you audit Metro General, and we've gone through this, and it's been a year of these allegations that were against Metro General, and you didn't find that there was anything wrong, then how could someone else come and make those allegations? So that means that you didn't do what you were supposed to do, but it was really just the process, I guess. That's
to some degree. I mean, that specific thing, there's only so much information that we can get in certain instances, and we have to say, here's what we did and here's what we found or did not find. And basically, really, it's a project that's going to be turned over to internal audit.
Yeah. I'm just trying to get some fundamental understanding myself, right. And just so we're really just auditing the processes more so than what the meat of everything or the details of everything.
The processes and the numbers in here. We're opining on these numbers in here are materially correct. That's what we're saying. And the controls surrounding them and the processes surrounding them. Okay. Now, Now, if the council or the mayor or somebody made an operational decision that went one way or another, we're not passing judgment on that. We're just making sure whatever transactions occurred are properly reflected in these financial statements.
Thank you.
So a couple of questions. One is that I didn't go through this entire document, but I found a typo. Who do I tell?
We probably have already caught the typo. So in order to get a full draft to you guys, it's a rush. And we actually turned the draft out about 30 days earlier than we did last year. So kudos to my team for getting that done. But we have done a thorough review of that, and we will definitely
The vice mayor has now, so it's done.
fix
I have done a thorough.
fix it, loves.
Did you catch that one?
Yeah, I got it.
Okay, good. Just thought that was important.
Yeah, that one's a good one.
Okay. So I have some questions about some of the numbers. Is that okay to ask, or, I mean?
Absolutely.
Between us, we'll
Okay, you can just try to figure it out. So I'm on page A5 of the document. You got there? So just on the, under expenses on governmental activities, the thing I noticed was like law enforcement and care of prisoners. In 2021, it looks like our expenditures were about $403 million. But according to this, in 2022, it was only $38 million. So what, I'm just looking at those going like, okay.
No, that's a great question, and that's where your eye goes first.
Yeah.
Kelly asked the similar question
Well, Kelly and I are very
during
similar.
our review.
I'm pregame, sorry.
And, you know, as a reminder, this is what's called a government-wide statement. So it's more presented like it's a full, you know, it's got everything in like a business. The reduction is the result of the OPEB change. So if you guys remember, council voted in July of last year to change the way we handled post-retirement pension, post-retirement benefits for retirees. And as a result of that approval, the OPEB liability dropped by about $1.5 billion, which is great. It also resulted in about $1 million worth of reduction, like in expense this year. So, like a benefit back to, so a positive kind of expense, if you will. So that's why these numbers look so different across the board. That savings is spread out across the departments based off of salary. So it's an allocation across these departments. Do you have anything else to add on that?
an estimate.
It's an
It's
estimate.
one of those
The
estimates.
It is an
1.5
estimate.
billion is spread out across the
The
department?
1.5 billion is on the liability side, so like how much you're going to owe in the future decreased
Okay.
by about 1.5 billion. And then on the expense side, there was about $1 million worth of
Okay.
kind of positive expense, if you will.
All right, so that's why it's showing up.
Yeah, go ahead.
Say something?
Yeah, go ahead.
I think I can help, because if you look at this, these are the government-wide, so they're full accrual, and what they said is exactly right. The benefit you received from the OPEB reduction was spread across. But if you actually want to see what was expended for law enforcement and care of prisoners, you could go to B10. So if you go to the fund statements instead of the government-wide statements, you can see what the actual expenditures were. You can see that's more comparable to the to the prior year amount.
That's a great one, David.
351 million is what was actually, the expense is different than the expenditure from an accounting term. So what you actually
You accountants, you always.
paid out was 352 million, and and not 38 million.
Okay.
Yeah.
It would
So-
be the 38 million less the benefit is what you saw in government-wide.
Right. There's two types of statements. One is a fund statement, which are true expenditures. What I'd like to think of it as cash. What cash went out the door. So the cash that went out the door for these departments is really comparative to what they budgeted for these departments. So like when you approve the budget, cash out the door is considered the budget. When you get to the government-wide, it is more of an accrual basis. So it's more like, and that's why I said it's kind of more like a, full GAAP accounting business entity.
For me personally, my favorite chart, and the one I use most, and I think probably is easiest to understand, is the balance sheet, and that's B6, B7. I think that's where the stuff that I get the most questions from this group lives, and the easiest one to. I don't mess with that other one. Like I don't.
A lot of people
It's
don't.
very hypothetical. It's not really. It's an accounting treatment. I feel like the real meat is on the balance sheet on B6, B7.
Yeah, to
Still
Kelly's
hard to
point,
read, but
exactly,
easier
is
to
that
understand.
most of what we see in the government are the fund statements. The government-wide are really, it's a conversion. We take the fund statements and we convert them to full accrual accounting, really for the ACFR, and that's the only time we do it. So,
So
I've got some other questions, but I know that Councilmember Hurt has a follow-up.
I was looking at the same thing in terms of the reduction, and I was wondering if any of this was impacted by COVID is the reason why the reductions were there in the expenses.
no, ma'am, that particular page, that A5, that is really the full accrual accounting. And so it's really not, it's apples to oranges compared to what the fund statements are. So no, there was not really reduction in terms of expenses. One area that.
So what's the blank on the conservation of natural resources like in 2022? Is that because it hasn't been calculated just yet, or what?
It was just zero. I'd have to go back and look at what the 394 was, but there was nothing in 2022. I'd have to go back and look at Councilman Hurt. Unless you guys remember off the top.
And I guess that was the same thing for those others that's below with the farmers market and district energy and.
So those are under the business type activities. So this chart is divided between like government activities and business type activities. And so if you go kind of over under the business type activities, you'll see that's where all the business type activities are for comparative purposes.
So it doesn't have any.
It doesn't have any, yep, it's,
Janine, again, on B10, you can see the expenditures for conservation of natural resources, and it's comparable to the prior, it's $324,000. It's just that the OPEB benefit totally
Wiped it out.
eliminated on the government-wide, but it didn't on the actual expenditures.
Oh, okay.
On B10.
Okay.
Good? Councilmember Hurt?
That's-
Okay. So next question is on B4 before we get to the famous B6. That's bingo.
B4 is a good one.
B4 is a good one. So I'm just looking at public welfare and the operating grants and contributions we got in, which were obviously substantial. It's about 144. Hold on. You see where I am? So B4, under primary government, you got public welfare. So it's $144 million worth of operating grants and contributions, but the expenses look a lot lower. So what I was questioning was, we got a lot of money in, but the expenses are lower. So does that mean that money is still on the table? It just didn't get spent? What does that mean?
so a lot of the grants are reimbursable grants. So you spend first
Right.
and then you go and seek reimbursement. So the expenses and what you see as revenues don't always line up in a year-to-year. So you spend, right? So you may see the expenses here. Those will probably get reimbursed sometime in the future, or they could have partially been reimbursed during the current year.
Eventually, do we match up
Yes,
so that we make sure that
eventually,
we're
if
all
you
on the same
combined all the years between grant, revenue coming in and grant expenses, that should equal like a zero.
Okay.
So in the 144, that includes some reimbursement from the prior fiscal year?
And again, if you go to B11, you actually did spend a good portion of that money because you had 148 million in expenditures. So it's just you got to, that OPEB thing threw everything off
It
this
did
year.
throw everything off.
From a government-wide standpoint. But you still spent what you spent, and that can be seen on the fund statements at B10, B11. So that's really what you kind of need to look at to the prior year versus the expenses on the government.
Okay. All these accounting things.
One of the things I like, you guys, and you guys may, but in the G section, the G section really has budget to actual amounts on like your general funds. So your general fund, GSD, and USD are in the G section. So when you think about, like, I know we're very budget driven, right? And so when we approve the budget, you can actually see here was what the original budget was, final budget, and then the actual expenditures kind of by department. You can also look at the revenues as well, which is also kind of on G4 and G5. Again, it kind of gives you, here's what you budgeted for revenues, and here's what actually came in. I think those are very meaningful for you because you do approve the budget every year, and then you can kind of see here's what that was spent, here's the money that actually did come in based off of what you budgeted for revenue as well. And then these numbers flow all the way up through the B sections, if you will.
Okay, I have one more question.
Yeah, go ahead.
That it was in section H. Sorry,
H is
I should have found something in G, but no, it was just a question in H. It's on H13. It's just trying to make sure I'm clear on this. So if you look all the way over to 2021, 2022. And it's just a question about the other taxes, licenses, and permits jumped pretty substantially between 2021 and 2022. It's about $365 million. But then if you look at the next line, the fines, forfeits, and penalties, that's been decreasing. Do you know what's caused all that? I assume we probably jumped.
Since you talked about the other taxes, license, and permits, it's a lot of alcohol tax coming in.
Okay.
Alcohol tax, hotel taxes, they really boomed during fiscal 22 as COVID. You saw COVID kind of drop off and lessen, and Kelly and I were on the call and we were talking about that earlier today, so that's why I was like, but alcohol tax very much increased, hotel taxes increased, and then on the fines, forfeits, and penalties, I would honestly have to go dig into that. To me, it's I hate to say that, but it's kind of a small.
I know. I just noticed that it's been decreasing over the years, and it's probably now, if you compare it to 2017, it's now less than half. So I just was curious as to why.
I will certainly get back with you. I'll
That's
follow
fine.
up and get back to you for sure.
That's all I got.
Good, great questions.
Sure. I've got more, but I think that'll take care of it for now.
During your audit process, did you identify any occurrences of fraud?
No. There are a couple cases that were self-reported to us or that they're not even, I wouldn't even call them fraud yet, but areas that we have to look into. I mean, very small. You can call the state, anybody can call the state and report suspected fraud, and it eventually trickles its way down to us. And if it's over $100, we're required to do audit procedures. And then we will have a report that will be uploaded to the state when all is said and done with our response, if we found anything, if it was substantiated. There's a couple cases, right?
There's about $500, I think, in the treasurer, $900 maybe in the treasurer's office. Not the treasurer's office, the trustee's office. The trustee's office self-reported some missing money in the till, and I think it was like somewhere between $500 and $900.
You guys look into that.
And then we
investigated that.
yeah. And then we had a couple very generalized letters
Yeah.
from the state that we looked into or are in the process of addressing, but we haven't seen anything to substantiate those.
Thank you.
Any further questions? Okay, well, thank you for the presentation. We don't approve this, but we do need a motion to accept the annual financial report in the process.
So moved.
Is there a second? Any further discussion? All in favor to accept? Aye. Any opposed? Good. Thank you.
Can I add one little small thing? This year, we are working on what's called a PAFR, Public Annual Financial Report. It's something that Kelly really wanted us to do, and we're really excited. We're hoping to roll that out sometime in December, but it is a scaled-down version of this, like significantly scaled down, that's designed to be a little more palatable for the non-accountant, if you will, because this is very, it's a large document. It is very complicated. And so we will be excited. We'll next time we meet, we will bring you guys a copy of it too and share that.
That will be something that will be kind of driven from the, so.
Good news, GFOA gives an award on that, too.
They do.
Give that award.
I guess my question is, this will not be an audited
It is,
piece of information from Crossland.
no, it is not an audited document.
This is y'all's work, well, your work product is your opinion, I understand. Okay.
That's right.
Is this something that's designed, obviously, for people like me who are not accountants, but also for public distribution so people can actually get a better sense of, instead of trying to figure this stuff out?
Well, this is public. I mean,
Yeah, absolutely.
this will be posted, I guess.
Yeah, but I mean, I think what you're trying to do is make something, I mean, most people don't have time to try to sort through this. Some people do. But you're trying to come up with something that's smaller, easier to read, to get the major points out of what
Yeah,
you all
so
have.
everything that'll be in the PAFR will exist in here, but
Yeah.
maybe not in that format. So maybe it's
Cliff
a
notes.
data set that's in one chart and it's another chart. Wouldn't it be nice if they were together? So that affords us the ability to, it's all going to be in here, but to make it more meaningful.
And this correspondence to this, right first, it's doing a lot of the plain English
It is.
already. You're just, I guess you're presenting it a little bit different, or adding and enhancing it. And submit it for an award.
You know,
And Brad, you talked about posting on Nashville.gov, so we are working on that. It generally will take us about a week to get that posted, but it will be posted
Just trying to
momentarily as
do our
soon as
part.
we kind of get everything in PDF, because you got to do a little, make sure it's got tabs and you can click here and click there and searchable and all
When
of
is
that
it,
stuff.
when is it required to be posted? December 31st?
Yep, but our plan again is to get it posted next week. So.
Well, thank you. Thank you, Crossland. Any other questions? Okay, next item.
All right, good afternoon. A couple of weeks ago, we issued a report on the open records process. We did this audit. Well, first, let me recognize Mary Cole. She's in the back. She's our senior auditor. She did the work. We appreciate the work that she did. But we did this audit because, open records is a major component of transparency. Transparency is a major component of public trust. If you don't have transparency, good open records processes, bad things can happen. Also, we've never looked at this process before. It was a little bit of a tricky audit because it's very decentralized, which makes our audit process a little bit harder to do. But basically, you have a state law, and the state law says that most public documents are open to the public. There are exemptions. There's quite a few exemptions because there's a lot of documents out there. The exemptions are typically related to protecting the citizens from harm or protecting sensitive operations of the government from harm. So we don't want to give social security numbers out. We don't want to give health information out. We don't want to give sensitive IT information out on, somebody could come in and crash the system. Hacker could get in and crash the system. So there's this list of exemptions. And so what we were trying to do in this audit is, are we processing open records requests properly the way we should in compliance with this law? And are we properly exempting information that could cause harm? Okay. Now again, to kind of back up and to give a lay of the land, When you're looking at enterprise-wide operational processes at Metro, by nature, sometimes they're going to have to be decentralized. Metro is a very big, diverse department. Processing open records requests at the health department, where you have health information, is going to be very different than schools, where you could have sensitive information about kids. So it's just totally different and a lot of different requests. The way it works, we have a public records commission. The state requires that we have that. We also have a Metropolitan Code that kind of ties. It's similar to the state law. It's just more tailored to Metro. But you have a commission. And their responsibility is mainly to maintain public records, the rules regarding that, like think document retention. How long do we need to keep payroll records? How long do we need to keep, information on contracts or whatnot? And they also are responsible for access to public records. So you got the commission up here. Then you go on the ground. The responsibility for processing open records is at the individual department level. However, a good hunk of them, I think it's like 36 of them, utilized for tracking purposes. They go through the Metropolitan Clerk. So what that means is they go in, you get a request, the date of the request, the date, if it was denied for whatever reason, denied the reason, when the response was sent, and that sort of thing. Then you got the remaining departments do their own thing. They have their own tracking mechanism. Now, when you look at this report and the meat and the tenor of the report, basically what we're trying to communicate is it makes sense in some ways that we have a decentralized process, but there are components to this process that need to be more centralized, particularly through the Public Records Commission. So, for example, we want to see a more mature reporting mechanism. So, like each department, it can be very different how they track things. Some people track it through a spreadsheet. Some people track it through keeping it on a shared drive. Some people keep it on email. So what we're going to meet with the Public Records Commission in a couple of weeks to go over the report. And we did talk to a couple of people on the commission. We'll talk about that here in a minute. But basically, have a more reporting mechanism where you require the different departments to capture certain information. So, for example, the date that it was received, the date that you actually closed it. If you denied it, why did you deny it? You'll probably need an aging type process where if it took over so many days, why did it take so long to process the request? Now, that's going to be dependent upon the type of information. A lot of times what takes time is if you have to redact information. Training. Mary sent out a survey. About 44% said they received at least one training from the state or something like that, but a lot of them had not received any training on the open records process. Now, saying that, I think if you're a Metro employee, one thing that's ingrained into you is that everything we do is open to scrutiny. So I think people understand if you get an open records request, you guys send it out. I think probably the bigger risk is that you're sending out something that you shouldn't. Or that's not timely. But one of the things we're going to suggest is, have good policies and procedures per department, have a legal person review it, because those exemptions, there's a lot of them, a lot of it's department specific. Make sure maybe once a year your legal person meet with you on these policies and procedures, have the exemptions there, make sure they understand what the reporting mechanism is, what the requirements of the law are. Document retention, again, that's something, it's a little bit confusing. If you look at the state code, sometimes state codes can be easy to follow, sometimes they're not easy to follow. No one's really aware of the document retention standards for open records requests, which is basically you don't have to keep the information that you sent to them, but you do have to keep record of what they requested. Now, you do have to, let's say it's payroll records, and I can't remember off the top of my head what the retention standards are for that, but let's just say it's 5 years. Obviously, you still have to keep the payroll records for 5 years, but the actual request you have to keep for 12 months. The last thing has to do with come up with a complaint process. Now, again, your two biggest risks on this, one is, again, sending out information that could cause harm. That one you can mitigate through training, through review, that sort of thing. Another risk, and it's very difficult to come up with controls to adequately mitigate it, how do you keep people from cherry picking? In other words, I got a request, I got this information, and I'm pulling out the information that I don't want anybody to see. Now, you've got some compensating controls. I think one of the best things that's happened related to open records is the internet. I mean, you can go online, we've got the open data portal. Nobody may know it's there, but it's there, and there's a lot of really good information. You can find agendas, you can find the minutes to meetings, all this stuff is online. So it's not like 30 years ago where if you want to look at our reports, you couldn't go online to see our reports, you had to request directly from us. You do in some of these bigger departments, you'll have a central person that's responsible for it. So a lot of times they're not tied to the information that's actually being processed. Now, in theory, and we didn't see anything that this was happening, but in theory, you could still have somebody come and run interference, or if you're a smaller department like we are, again, it's very difficult to come up with controls because, yes, they review it, but most departments review it. But even that, you can get around that. Sometimes we like, in the internal audit world, we like to say management reviews, that's a great control. But the truth of the matter is sometimes you're looking for reasonableness. If you don't get too greedy on stuff, that's something that doesn't necessarily work all the time. But if you had a complaint process, maybe that would help. If you don't think you're getting all the information, maybe even like we could run the report independently, like if we got a Hub Nashville report. But even then, there's challenges to that because there are some things that are legitimately, like in our office, you can't look at it. If we're in the middle of an investigation or our work papers, you're not allowed to look at those, and for good reason. It goes back to you're going to have to work with some of these departments to make sure that, are we giving them information that they shouldn't? But that's one of the key challenges. But when you looked at transactional testing, again, we didn't look at every single department. What we did, we looked at all the departments that utilize the Metropolitan Clerk system. And we looked at the schools, the health department, and police. Yes, thank you. Very good. And we did those because we thought those are places that are high risk. If one, the volume, and then two, the type of information could be damaging. So we want to make sure. Again, it looks like people are in good faith trying to process these requests. Again, I think we need to have a more mature reporting structure, particularly on the length of time it takes to get these requests out. But for the most part, when you're looking at the tenor of this report, again, we understand that it's decentralized, but we're saying there are certain aspects of this, particularly with the Public Records Commission, that we need to tighten some things up, make it more centralized. Does that make sense? Questions?
That's a lot of requests that come in, particularly in the police department.
And one thing to keep in mind, too, and this kind of muddies the waters, there are things that, what is a public records request? Like our reports, well, they're online. I mean, to me, what would be more of an open records request for us would be, we want to see your payroll information in terms of like time off, who's taken this time off, or how much time has been booked to a particular project, who's been working on it, that sort of thing, because we're the only ones that can pull that stuff. Reports are all on there. So sometimes there's this debate, what's the normal course of business versus what's a true open record request, which again, that's something that training at the individual department and what kind of reports you want to see coming up. But you're right, there's a bunch of them.
Okay. Any other questions or comments? Thank you, Bill. No business.
What you each will see in front of you is that, so Nashville General Hospital, the investigation work that we have done, the report has not been issued yet, but Julie Groves from General Hospital and I worked very hard to get a final draft report done this morning to discuss. And if y'all are okay with it, I will walk you through it. And if there's any questions, we can have questions now. Unfortunately, this is the last meeting that Julie will be attending. And we can have more questions in February. But since this is Julie's last meeting, I wanted to make sure that we got this kind of discussed today. And this would be issued later this week. We just have to do a little bit of tidying up to it, and as far as formatting and making sure spelling and all that stuff. So basically, what you'll see in this memo is that we kind of reevaluated two of the allegations within the original Barry Dunn report. The original Barry Dunn report was presented back in December of last year, and there was a lot of conversation around it and some questions around some of the allegations, specifically A1, which related to the timeliness of reporting of CARES funding near the June 30th budget time. And then other one being around a lack of documentation received relating to credentialed providers providing services underneath somebody else's sign-off. So I'll walk you through what we did for both of those and then the outcomes of them. The first one was A1, which was the timeliness of reporting. Barry Dunn had said in their report that the timeliness is a subjective term, but they had determined that they substantiated that it wasn't reported as quickly as they thought that it should have been. After talking more with General Hospital and reevaluating the work that they've had, we've changed this to unsubstantiated because the money came in, they didn't request it, so they didn't even know if it was theirs. Then they had the money sitting there and they aren't even sure what they're supposed to be using it for. 7 days to figure out what has to be done with this is reasonable because it takes time. It's not just the timing of it being near the end of the year was seen in allegation A2 and A3. That was just kind of a coincidence. There was no fraud or anything or any type of trying to hide the funds. So we changed A1 from substantiate to unsubstantiate. And that was the first one that was pretty straightforward.
Question.
Yes.
Was there any variance in that length of time, the 7 days, from other times during the year to right at the end of the year?
We did not look into that because this was specific to this one allegation. We can look into that some more. That's a great point. But for us, it was mostly just finishing out the work that Barry Dunn had done. And so I can look into that. But Julie, actually.
I could provide a little information as far as that goes. Because of the way that our CFO meets with the finance department on a weekly basis, and when he reports out at that finance meeting, he's reporting the prior week's information. So we'd gotten the money, I believe, on a Sunday, and then he reported out on that Wednesday, but he's reporting for the previous week, not for the current week, what may have occurred. When he reported the next Wednesday, which would have been for that previous week, that's when he did report it.
So it would have been consistent.
So why would it be considered even fraudulent action, especially when it's just not 30 days?
Exactly. So this allegations A2 and A3, I think, pointed more towards was there an actual, did they intentionally not report it? And that would have been the fraud piece of it. The first piece was it wasn't reported timely, and that didn't really necessarily deal with fraud, and I think that it was a judgment call by Barry Dunn that we disagree with. And so I would just say that was just their judgment call to substantiate it. It wasn't necessarily saying, and I think in A2 and A3, they kind of say it wasn't fraudulent. There was no fraud around it. There was the allegations that it was done intentionally, but those were unsubstantiated.
I guess I'm trying to figure out what precipitated the allegation to begin with, that it would have been an intentional or malicious act, as opposed to something that just happened as we see the circumstances surrounding it.
I think that the reason that it was initially thought to be an intentional act was just the timing of it. It was during the budget season at the very end of the year. During COVID, when there was a lot, when Metro's budget, it was around 2020, it was in 2020 when the comptroller was there. And there was a lot of financial strain within Metro. And then I think that there was the thought that maybe they wanted more money, or that since it was during the budget process, they didn't want to report anything that might have them lose some of the money that they were going to be budgeted. So I think that that's where it originated from. And so that's why we looked into it, was because that's a pretty serious allegation if it were to happen. But all of that was unsubstantiated. Any more questions on A1? Okay. So B1 was an allegation that a provider was not credentialed, meaning that they could not work at the hospital yet, because they had not been, was it insurance credentialing or financially credentialed?
Financially credentialed or credentialed, but
had not been financially credentialed, and that they had used somebody else's sign off on patients because they had not been financially credentialed yet. This was one where Barry Dunn had put that they were unable to determine because they had not received documentation. They had started some work and requested some financial credentialing information. We just completed the steps that they were going to do. So what we did was we got the remainder of the financial credentialing dates for all the providers at General Hospital, and noted that all of them were financially credentialed prior to doing any of the patients in the 2 months that were selected. We took it steps further to make sure that, to try to see if maybe somebody had shared their sign-off, or somebody had falsely signed off on somebody else. And that's where we went through and we looked at all the claims that were charged to different providers. We made a sample, so we then took their schedules. And we said, well, this provider wasn't scheduled to work on this date. So let's see documentation, which Julie pulled for us for 38 different patients or 38 different claims, where it said the provider wasn't scheduled. No, on their master schedule, they were not scheduled. But we have documentation on that claim showing this provider signed off on this patient. This provider was there that day. And so we just compared those two to make sure that the provider was actually there. And we did that for 38 different claims within that. All of it came back. The providers matched up. The dates matched up. Scheduling changes. And then also, so you can't just do that. And then also, there would have to be collusion for a provider to use somebody else's login. It's not as simple as somebody overriding it and just taking somebody else's login. So with all of that, we unsubstantiated that one. So we changed it from unable to determine to unsubstantiated. Are there any questions on that one? So this is the final draft report that we will issue later this week. The way that it will be presented is that we will take the Barry Dunn report, because Barry Dunn's report is still there, has half of the allegations in it. We have redacted everything related to these allegations. And anything any of the conclusions around these allegations. And this will be composed with it so that you will see both of them together.
Fighting asking this question. On A1, this is CARES money from the Treasury? Is that what this?
Yes.
PRF funds,
Sorry?
provider relief funds.
Yeah, from CMS.
And they came in a check or a wire?
Wire.
A wire, they just showed up. That's
How would the Treasury know where to wire them to without getting
Well,
instructions?
because it's based off of our hospital's NPI number or our where we send our claims to CMS. All hospitals across the country had money show up in their bank accounts that weekend.
So when my previous employer, when we got our CARES money, it did just show up in our bank account, but that was because we had to go to the Treasury website and give them the information.
Ours is based on our claims submitted. They calculate the amount of money that they paid the hospitals based on the claims submissions that we've had for Medicare patients. So they already had our banking information.
Mr. Dunn, he is certainly one busy character.
He is.
Did you get your question answered?
All over the country.
I got an answer.
Okay.
So you're saying that they should have known where the money came from and why?
I don't know the mechanics of the PFR, whatever the letters were, but for the CARES designation, a list came out in, call it March, that said city ABC gets this, city DEF gets this amount. And then you went to the website and you gave them your information, and then literally it appeared one day and a half, and the next day and another half. And you didn't know it was coming, but you knew what you were getting weeks before it arrived. And I don't know enough about this one to know what the process was. But
So when you said city, does that mean that it would have also been reported to Metro government, considering that this is a city hospital?
For the CARES money, that data was available publicly to anyone, so I could have looked and see how much New York City was getting, I could have looked and saw how much Nashville was going to get. I wouldn't have known when they actually received it.
Right.
But someone could have proactively gone and looked at any other city, states, counties allocation. But again, I don't know anything about the hospital one. I don't know how it works.
Monies that hospitals receive is separate from monies that cities receive. That was a whole separate process for them.
But I don't know if it was publicly available or not.
Yeah.
City hospitals.
Hospitals, period. Hospitals got CARES Act funding.
Well, I mean, I'm just thinking about a public hospital versus a private hospital. You know, being that it is public and it is the city's hospital, then there has to be some trail of it for the city, it seems to me.
And if it were publicly available, perhaps someone at the city should have seen it as well.
Right. So that could be negligence, not necessarily.
Negligence. I wouldn't hear, so I'm struggling to understand the complaint. But
No, I'm just saying, as opposed to there being an allegation of fraud, could there have been an omission, which could be seen as negligence? You know, if that's what. I'm just trying to make some sense of it all.
That's why we have auditors.
I'm also trying to make sense of this lunch that we were supposed to have because I'm about to faint.
We're almost to executive
Yeah, we get ready to do that.
But nobody said anything, and I didn't hear the blessing over the food or anything.
That's happening right now. Okay.
We have one more thing that we need to go.
Yeah, we have one other, we need to approve.
Yes.
Any,
Yeah, because nothing else really changed since the last meeting as far as administrative items.
There's a 2023 meeting plan.
Yes, and there's just only a slight change on it, but y'all usually approve this so that we can get it
We
posted.
have a motion to approve. I didn't even look at it. Wait a
I was
minute.
about to say, I can explain a couple of changes.
Let's get the changes.
Mr. Reed pointed out.
Somebody mentioned lunch.
Mr. Reed pointed out at one of the prior meetings that it used to be that y'all would get the draft and then talk about it in executive session before the acceptance. And that is true. What happened was with COVID and R12 implementation, things got pushed a little bit, and trying to have 2 meetings in December was not going to happen. So that's when we can't change the format. But I worked with Janine for these dates for next year, so some of them are a little bit off, or a little bit different. So that's the only changes that happened as far as our scheduling.
He's trying to learn. Any questions or comments? And this can change.
Yes, yeah.
I mean, it will change.
Yep.
So,
Do we not need a motion to adopt?
Yeah.
yes.
So moved.
Second. Do I have a second?
Second.
All in favor? Aye. Any opposed? That is approved. And then, so we need to adjourn the public meeting and
good luck.
we need to,
Vote first with regards to whether you're going to go into executive session.
okay.
They're planning to go into executive, yeah, so
Okay.
so
Do I
you
have a motion to go into executive session after we adjourn the public?
So moved.
Second.
All in favor? Aye. Any opposed? Now, do I have a motion to adjourn the public meeting?
So moved.
Second. We're adjourned.
Do you want to?
This has been a service of the Metro Nashville Network. If you would like to see this presentation again, or for more information on this and other programs, visit nashville.gov.